I had this idea before I started streaming the last 2 week was to work on magnets, measured move, and the tendency to identify strong trends. I was long due this video. Also, if you would remember, what we've been doing is whenever we've been seeing strong trends, good moves, continuous moves, we've been relying on the prior bar lows, prior bar highs in case of sells. But now, when the market is dicey, undecisive, still what works well is uh, to know where to book your profits, which are the areas you should be more cautious of, and where might the market is heading. And the best way to know these things is to know where the magnets are, where the measured move happens to end, and what is the projected targets for this measured move. And that is way you can rely on, and that is what I have been doing from the past 10 days or past 2 weeks. You'd see me projecting these ABCDs, and these have been very helpful and very reliable, and I want to continue doing it to know where the market might be going. And this is just I would say, while you cannot surely rely on them only, you'd have to react to what is happening. But majorly what you can do is you can always just project these ideas to know that that could be a potential point where we might be headed, to ease up your position, maybe to see how the market is reacting to those areas, to maybe make better decisions the way I am doing it. So the best I would say are the ones that I have highlighted in the blue ones, while the other could be also a little reliable, but I would say focus on the ones that are the blue ones that I have highlighted. And and the major ones are, whenever you've seen, so the market generally moves in a two-legged move, and it could be a extension. If you see the second leg strong, it could be extended to a three-legged move, and then that could be a formation uh, of a wedge, or maybe you'd have to see what is actually happening. But generally the idea is that you would see a two-legged move. So that is the ABCD. Whatever move that you've seen from some point, and if it's a strong move, measure that move. That could be an AB lag. And if you see a retracement which does not, generally it does not, sometimes, only sometimes it would go to the start point, which is A, but mostly it won't go to A. At some point in the middle it would start reversing up, and then you can project what has ever happened, whatever the size of the AB lag could be projected, and that would be a CD lag, which would be a measured move up. So the biggest magnet is the measured move that I've rated a look at, and that is an ABCD mostly, and I rely a lot on it recently, and it seems to be working well for me. And the second reliable is the high and the low of the day. So if you just mark what was the high of yesterday, what was the low of yesterday, if you'd notice is that the market generally tends to pull get pulled toward those highs and the lows, and then from there you could see if it's a high, either you see a continuation or the market reversing up. So you pay a lot of attention to the high and the lows of the day. Now the another observation from which the prior bar low and prior bar high came upon was, uh, you would see if the high and the low of the days are, which are the prior bar high and lows are magnets. And if I just change the time from a daily time to a 5 minute or a 15 minute time frame, you would see that that itself can act as a magnet. That is why generally a lot of times the market would be pulled toward the high and the lows of the prior bar, and those previous bar high and lows could be points from where you can make your decisions. So if it's a strong trend and the market get pulled toward a prior bar low, you maybe want to buy. Your risk is much more controlled. And similarly, lot of time you would see a shaved bar, and the shaved bar is a bar that does not have a wick. And when you do not have a wick, what would happen is, you can state that if the candle does not have a wick, it is the place where everybody agreed that we should move in that direction. And what traders would do is they would put their stop losses right below that bar, and the market generally goes to the area where the masses put their stops, and the stops are at the lower end or the higher end, depending where the market is moving of that shaved bar. So you want to put your entry there. So whenever you see a place where everybody agreed in the market going there, you might want to do what happened previously, because that is an area of consensus where everybody agreed. Now there are other magnets, and since those are on a bigger time frame, does not matter for a day trader much, but good to look at to maybe form your biasness, or maybe to just know where we might be headed. So it would be the daily, weekly, and the monthly swing lows and highs. And uh, I would say these are some, and then we've written if there is a beer bar and there is several bull entries. Not very reliable. Uh, it is one of the magnets. Uh, Maybe when you start trading much better, that is when you should look at those. Otherwise, let's just focus on the ones which are much more reliable, at least for me, because I've been using them. Let's look at the shaved bar thing. This is a shaved bar. We went almost around where everybody agreed, and we saw a move up. Shaved bar, everybody agreed. Shaved bar, I mean, nothing works all the time, but this is also a shaved bar, and but it depends on the context. If you'd see, this bar closed below the lows of the candle, while we've seen a retracement back up, the continuation of the trend. You'd see we failed to close higher, and that is when maybe you not want to buy the shaved bar lows. And these are shaved bars as well. uh, Similarly, this we've been talking from some sessions. You what you would see, let's say this is the open in the market, went above, and it was a strong move, but it failed to continue, and the market came to the point. You've seen the retest of the area from we broke out now. You measure the move up, and now there could be two things that could happen from here. Either the market goes back up again for the measured move. uh, Generally it's not what happens, which is what you would see is an formation. It happens very less, Meanwhile, this same can be projected down for a measured move, and that could be your target. and and this will be, we've done a lot of times. You would have seen me in the reviews where after the opening I've measured the move, and then I project it upward and the downward, and then I see where the market might be headed to make better decisions. And this generally happens, I mean, there's a probability, a possibility of it for 60 to 70%, so I would say that's a good possibility, and you should bet on it when you can. Well, this is right from the works of L. Brooks, and uh, this this is something that is quite reliable, and these are the measured move that we've, we've been talking about. If this was the move up, this is a measured move up, and then you can project the same things that we've been doing in our reviews as well. One thing to maybe wonder about is, should you consider uh, the lows to the highs, or should you consider the bodies? And I would say let's be more careful about the approach, and it would be much more better to do both. You measure the bodies, project it, and that is the starting point from where you would want to be very cautious, and then you project the considering the highs and the lows, and project it, and that should be your ultimate target. That is how I do. Once we've reached the bodies, maybe start cutting down on your position. And the thing about the ABCD, as in the market generally either could have a two-legged move up or a three-legged. And how do you know, generally, if the trend is much more stronger in the CD leg? One thing is that it would for sure extend much more greater than the AB, because it is much more quicker. Secondly, there is a possibility of a third leg when the ABC D move is much more stronger. So if the CD leg is made in just a few bars, this strongly indicates that the trend is strong, and that the CD leg is going to be an expansion of the AB leg rather than the measured move of the AB. And the other thing that you can notice in the ABCD move is generally whatever the amount of time or the number of bars it has taken to form AB would be taken by CD. And also, let's say if you are expecting an other leg up, you can always measure the retracement, uh, plot it right here, and that could be another retracement. Generally the retracement are as well of harmonic move. uh, you can read more about it from the work of Larry Pesavento, a great trader, I would say. uh, ABCD and the harmonic movement thing, you can maybe uh, read from Larry Pesavento, and then uh, the measured move work, and how the price reacts thing, or purely the price work and the magnet work can be read from L. Brooks.